Welcome to TradeTheMBI.com. This is John. This report is for the 27th. Well, the other day, continuation of post-Santa rally moving into the end of the year. Not a surprise, we were already seeing our MBI magenta over yellow. No short activity here in the white MBI at all. And like we talked about before, the steel coming up from below. Already getting a little softer, but you can see the rejection of shorts in the DOC cyan to green midterm buyers. No real pressure to the downside at all. And some people say, well, it's overbought. No such thing. What we would say is that we got algo activation and they're still in the middle of their active run. And until that completes, we know where we're going back to because the positive extreme is pretty clean. Just a matter of marking those spots, and that's where the returns will be. But we're still in this rosy period of the belief that the Fed is going to completely, fade on everything, and Treasuries banking that already, pre-suggesting it, which they're again ahead of the game as they were all of last year, and were wrong for most of the year until things evened out. But this is the one to watch. Oil creeping back up now at 75. The more we get issues with the Red Sea and that, the greater that risk of not just trade interruption, but oil transport interruption, and whether those disruptions will cause supply issues remains to be seen yet, but it could start having an impact. And when it does, a move back into the 80s, and any dreams of the Fed doing anything other than just sitting back and letting it happen, I think might be a little more fanciful. The real question becomes, how bad does it get from a economic standpoint and budget issues, and whether or not they have to back off for those reasons. They don't seem all that concerned about running the deficits that are going on at this particular stage. So more of the same. And as long as that's the case, no real headwind to the market unless oil really gets out of control. That's a super bonus for the euro, except for if that oil begins to creep up, there's just no way you can sustain a euro because you're going to have to trade for dollars. We've already seen, though, that a large chunk of the world will start to not trade in dollars for oil and directly in other currencies. That's going to start to have an impact on the dollar as well. So when they talk about the de-dollarization and that's where you get the breakdown. And I think that you start to see it in gold, obviously, at these levels, but even in crypto, because again, it becomes a relative view. And that's why we've seen the jump from back over here when the beginning of those changes started taking place in October. And we can see the confluence of how that devaluation with inflation running well in excess of, well, beyond the Fed's range, but even beyond what the CPI and those numbers read, people's practical inflation is far greater than any time the market ever posts a number. Same with unemployment. With the manipulation with the numbers, it's like you can do a lot of things. You just stop counting people and miraculously have super low unemployment. That doesn't mean that there aren't people who wanted a job and just don't have one. They just stopped looking. ETH, from its standpoint, had a pretty soft day, but held support. Not surprised, but we are seeing an interesting increase with all the excitement building about both Bitcoin, ETH, and crypto in general. I think there's going to be some surprises for people as that volatility will start to ramp up with profit taking. You can see we had very tiny range volume wise, and looking a little softer here to start out the day. We've already got a breakdown of MBI magenta, but no real short activity again. So it's just a matter of bulls keeping things going, and as long as they do, we'll just go back and forth. You can see even from an intraday 5-minute chart, it all started right at the pre-market open. Boom. And once that began, we had a couple of little soft spots, but overall it was pretty much clear until the very end, which they forced a last bit of short capitulation and couldn't quite hold that. And then it faded back. And here in the post market, it's not really doing anything note. It's just bouncing back and forth, and we're on the soft side of it at this particular stage. So I think that you're just going to see a little bit more of the same, but probably not even potentially today or even in the next couple of days, you're going to have the year-end trade that's going to start to rebalance some people, and that could create a little bit more volatility. It may not necessarily reflect itself in the final tape number, but I think that intraday we'll start to see some more range. So that'll be nice to get a little bit more volatility going. And then we prepare for the start of the new year, and it should be fun. As always, though, if there's anything relevant, I will certainly put it up on the Skype chat. Have a good one. Trade well.